if you look at any business news, either on the TV or in the newspapers or online, and you talk about the current Indian stock equity markets, you hear headlines like foreigners are dumping India, foreigners are exiting India, foreign investors have sold out of India, they are moving away from India, and there are a lot of rhetoric that gets created around it, right? And you have a lot of commentary and discussions about why are they selling, how much are they sold, where are they going, when will they come back. So I thought I'll just give you a context of what is happening and what you should think about as an Indian investor investing into equities. And also if you're a foreign investor looking at this aspect of foreign investors exiting India or selling India. So of course foreign investor investments into Indian equities have in the secondary market, public equities, have been negative. So if I look at since October of last year, October of 2024 till about Feb 2025, about $25 billion of foreign equity holdings have been reported as sold in the markets. And we know that seems to have caused a very significant impact on the stock prices. Now, not all stock prices falls or corrections are driven only by foreign investors. But of course, that seems to be a very big part of the current fall in stock markets has been the selling by foreign investors. There could be reasons for it in terms of markets being expensive, in terms of their allocations must have done well, and of course Indian equities have done really well for foreign investors. I'll give you some context on it. But before that, let's put this into context in terms of a $25 billion sale. What does it mean for the Indian markets and for foreign investors and for Indian domestic retail investors? So if I look at from the last 20-year data, cumulative investments by foreign investors have been about $200 billion. This current sale would have reduced it a bit, but that is at cost. So at cost, how much foreign investors have invested in the Indian equity markets? In the last 10 years, Indian mutual funds have bought about slightly more than $160 billion of Indian equities. So 2003 to 2024, foreign investors have invested at cost about $200 billion, roughly. And mutual funds have in the last 10 years have invested about $160 billion. So that's the rise of the Indian investor as we've seen it through mutual funds. And if I add direct stocks, it would be a lot more. So that's the balance and context in terms of when FIIs have sold. There has been a new emergence in buying from mutual funds, for indirect equities, and of course through other provident and pension funds which are also investing in equities. So the domestic investment has increased, but what foreign investors do, of course, does matter, and we are seeing that impact play out. The impact was a lot higher before when foreign investors would sell $10-20 billion, the market correction would be a lot steeper. This time, as I said, because of domestic investments and domestic capacity and absorptiveness, the impact has been limited. But let's go back to the context of that $200 billion of foreign investments into Indian equities. That number at the peak, at market value terms, was about $950 billion, roughly. I'm just giving estimates here at the peak of the market. So a $25 billion sale, and of course the fall in market value of roughly about 15 to 18% has got that number, the market value number down to should be about below $800 billion. So that's the context that you have to see. $200 billion of investment at cost, which became about $950 billion in market value. And that $25 billion sale has reduced the market value below. But the $25 billion is still less than kind of 5% of what the ownership of foreign investors are in the Indian equity market. So it has to be context. It seems like there's been a lot of sale, but it is not. From a market value perspective, from an absolute terms, it's still not a very significant amount. It has impact in the markets, but it's not been a significant amount. And so now you can argue, we know some amount of aspect that there could be redemptions in India dedicated funds, either ETFs or India dedicated active funds, and that's why some amount of redemption money has been pulled out. Other markets, other investments, other segments have gotten cheaper and more attractive, so money might have been moved from here to there. But still, from a context of market value and the overall holding, it's limited. And if you actually see the total value of investments that is there in India, so that say that take that same number of 950 billion, so about $1 trillion of Indian equity holdings in market value terms was what foreign investors own. And if I look from a total pie perspective, how much is the overall global AUM? So if I add investments of pension funds, sovereign wealth funds, endowments, universities, insurance companies, other global asset management companies, wealthy individuals, the stock of capital is upwards of $300 trillion. So when the stock of capital is $300 trillion and investments in Indian equity is about $1 trillion, that's less than 0.5% of the total foreign ownership or total foreign AUM invested in India. So I'm just giving you these numbers for context. It has real money impact when they buy and when they sell. The same thing happens when Indians buy and Indians sell. And we know that there has been redemptions and there has been exits from foreign investors. But from a context perspective, in terms of current market value, it is less than 5% of what they own. And if I look at from a very broad level, the overall investments by foreign investors into India is less than 0.5% of their total investable AUM. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.